So in this video, we're going to talk about KB Homes. They announced their earnings last week, and price action actually went higher after announcements. Initially, after it reported a strong fourth quarter and an optimistic 2025 guidance. However, the spike higher was only an opportunity to get short. Why? Well, if you scroll out to the monthly chart, price is pulling back in this uptrend. So up, lower, higher low, higher high, higher low, higher high, potentially higher low, potentially higher high, right? That's what price action does in an uptrend. So this pullback on a smaller time frame could be just this time frame's downtrend. Now the home buyer exceeded analyst expectations, reporting earnings of $2.52 per share and revenue of $2 billion. That was a 19% increase year over year. Company delivered roughly 4,000 homes in Q4. That was up 17% from the previous year. Average selling price rising 3% to $501,000. But again, as price broke through this level of interest at $74, price was in a downtrend. And you can even see on the spike higher, we nearly got to that level, which was resistance. Now support should become resistance again. Now, a couple of interesting things about the weekly chart. This rally, this basing candle, and this rally out. Well, that level is no longer fresh. Fresh meaning price action never saw that level after the level was formed. Meaning that there are less unfilled buy orders because price pulled back. Fill those unfilled orders before shooting higher. The other thing to notice is that price penetrated the zone more than 50%, kind of making that zone null and void. However, the liquidity is still at this monthly buy level at $60. So I would anticipate price pulling back deeper into the zone. All right, now let's go to the daily chart, but I want to show you one thing on the weekly chart. I like to look for wick over wick candle formations. And so you have this drop. Price went down, but closed above the low. Price opened, went high, and then went down. So this is the weekly chart. Wick over wicks typically imply a level of interest in the form of a daily buy or a daily sell. In this case, scroll down to the daily chart. You could see that we had this actually two levels on top of each other. You had one buy level or one shorting level there, and you had another shorting level there. So you had this drop in price, base and candle, gap and go. So that formed the other drop. So drop, base, drop. And then depending on how you draw your zone, you have this drop, two base and candles, and then the drop leaving the zone. So if I was to separate this a little bit so you can see the levels, at a level on level, typically I like to go short, in this case in the middle of the two zones. The reason being, you have an imbalance between sellers and buyers. As price pushes higher, those buyers are going to cancel out with those sellers. So if price was to move higher into this upper zone, that would signal that there's a bigger imbalance between sellers and buyers. Nevertheless, if you scroll out to the monthly chart again, the chart is suggesting the best levels to get long in this uptrend. It's going to be on this pullback to this monthly buy level at $60. That's where the liquidity is at, before you get the next impulse move higher. Thanks for watching. Subscribe. Please like the video.